Hello, and welcome to this chapter over accident and health insurance basics. Once again, starting out your chapter with some terms that you need to know and be familiar with. And once again, no definitions are really important for your test. So first, let's talk about some types of perils. Remember, a peril is the cause of a loss. For health insurance, there's accident and sickness. So there's an accidental bodily injury, which means the damage to the body must be unexpected and unintended, and I cover that more in depth later on. Accident-only policies. Now, principal types of losses and benefits, there is a loss of income from a disability, there's medical expenses, dental expenses, and long-term care expenses. As far as classes of health insurance policies, there's individual policies versus group. Now, individual factors for underwriting are physical condition, moral and morale hazards, and occupation. Group, and it's very important that you know, the group is underwritten as a whole. They do not do individual underwriting, so that concept will be very important for your test. Evidence of insurability is usually not required as long as it's done during the open enrollment period. Now, private versus government, which we had covered in the last chapter. Private is pretty much any insurance company that you can think of, funded by premiums. And then government are your government programs like Medicare, which is funded by tax dollars. Limited policies versus comprehensive policies. A limited policy, just as the name implies, is limited. It only covers specific accidents or diseases. And it is required by law that it must state on the first page that this is a limited policy. Some different types of limited policies. Accident only would obviously only cover accidents. Accidental death and dismemberment there's an amount called the principal sum of the A, D, and D policy, which would be paid for an accidental death. Now, for it to pay for an accidental death, death must occur within 90 days of the accident. It would also pay that principal sum for a double dismemberment or permanent blindness or permanent deafness. Then there's an amount called the capital sum, which is a percentage of the principal sum, but that's only going to be for loss of one of something. Loss of one limb, loss of sight in one eye, for instance. Another limited type policy is a travel accident policy. And so it's important that you know that any health policy that you might have in the United States, whether it be just a health policy, a disability policy, once you travel overseas, that policy will not cover you because overseas travel and residence will be excluded from your health policies. So you would have to have a travel accident policy. Now it's limited because it's only good for that time that you're traveling. Other types of limited policies are a critical illness or a dread disease policy. They would only cover specific critical illnesses or specific dread diseases like cancer or a heart disease policy. A hospital indemnity policy pays a specific dollar amount per day for room and board if you get confined to the hospital. It is unrelated to your overall expenses while you're in the hospital, and it does have a limited number of days that it would pay. So once again, it's a limited policy. Next is a credit disability policy issued only to those that are in debt to a specific creditor, and that would be like credit life insurance or credit disability insurance. Prescription drugs, obviously just cover prescription drugs. And then there are vision policies and dental policies. Now you do need to know for your test that because of the Affordable Care Act, pediatric vision must be covered under all vision plans, and pediatric dental must be covered under all dental plans. So those are just some limited types of policies. Then there are comprehensive policies. So comprehensive policies are policies where you have one policy that covers everything except for those things that are specifically excluded. Every policy has exclusions, and we'll talk about some of those now. When you think of a comprehensive policy, think of like a major medical policy, which we will talk about later. So common exclusions on your policies: war, acts of war, intentionally self-inflicted injuries, elective cosmetic surgery. Now, a cosmetic surgery could be covered if it was required because of an accident. Conditions covered by workers' comp, because workers' comp takes care of anything that would happen to you at work. Criminal activity, drug or alcohol related injuries will be excluded. And then also remember, make a note that overseas travel and residence will be excluded. All right, so the process of issuing a health policy. First, we're talking about advertisements. Advertisements are any printed or published material. The insurer is responsible for all advertisements. Agents cannot put out their own advertisements. They would have to get approved by the company. Next, this Life and Disability Insurance Guarantee Association. All you need to know about them, if it comes up in a test question, is they protect insureds in case insurers become insolvent or go bankrupt. Okay, field underwriting. You as an agent, you are known as the field underwriter. Some of the things that you are responsible for as the field underwriter, you help prevent adverse selection. Remember, adverse selection means sick people that are trying to commit fraud. The application itself that you complete becomes part of the contract, and we'll talk more about that in the provisions section. A notice to the applicant must be issued to all applicants, letting them know a credit report will be ordered and a report about their past health insurance applications, which would be an MIB report, which we talk about later. As far as signatures, there has to be at least 2 signatures on an application, the agent and the proposed insured. If you as an agent make a mistake on an application, there are 2 ways to correct that mistake. Number 1, you can mark it out and have the applicant initial the change. So you mark it out and the applicant initials the change, or start all over with a whole new application. Do not use whiteout on insurance applications. Insurance companies do not like that. So at the end of an application process, if the insured pays some premium with their application, they would receive what's called a premium receipt. The most common type of premium receipt is a conditional receipt. The conditional receipt says coverage could be effective as early as the date of application if it needs to be. Doesn't mean it's going to be, but if it needs to be, as long as the company would approve them anyway, and as long as they paid that premium. Next, we have insurable interest. What the term insurable interest means is that the policy owner, the person who is taking out a policy, must face the possibility of losing money or something of value. So to even take out a policy on someone, you would have to have insurable interest in them. Now, during the application process or sales interview, common situations for errors and omissions. So errors, mistakes, omissions, things that might get left out. So a misunderstanding or a misrepresentation. The most common times for those to happen are going to be either during the sales interview or at policy delivery. So insurance companies gather our personal information. We need to know where they're getting that from. Obviously, the application. It is important to note that the application is the main source of underwriting. This is where the insurance company gets the majority of their information to make a decision about an applicant. Next, there is an agent report that you, the agent, complete at the end of the application process, where you would discuss your personal observations concerning the proposed insured. Next thing they will do is order a Medical Information Bureau report, or MIB report. What you need to know for your test is the MIB was formed by insurance companies. The MIB is made up of insurance companies. It is a nonprofit organization. This is where all of our medical information is kept. So anytime we apply for insurance, our past applications are kept there, and anytime we use our insurance. The whole reason insurance companies got together and formed the MIB was to help prevent adverse selection or sick people trying to commit fraud. Next, they may require a paramedical exam. That's where a nurse comes out, asks more medical questions, draws your blood. Now, the results of a paramedical exam gives the insurance company your current health status. They may order your doctor records. That's called an attending physician statement, or APS. If they order your doctor records, that would give the insurance company your past health information. Sometimes they require HIV testing, so it is not against the law to do HIV testing. What you need to know for your test is that number one, there needs to be written consent to do HIV testing. Next, you need to know who can have access to HIV test results. Well, if I'm the insured, I can, my doctor can, the insurance company can, and the Department of Health and Human Services can. But I also need you to know who cannot. And that would be anybody not involved in the underwriting process, like other insurers. So other insurance companies cannot have access to HIV test results. Next, genetic testing. Most of the time it cannot be performed. However, if there is written consent of the insured, then they may perform genetic testing. And then classification of risk. So once they have gathered all the personal information, they're going to classify what type of risk are you to them. There are 3 categories for your test. There is either a standard risk, which means you represent the majority of the people in your same class. For me, it would be males, age, height, weight, avocation, occupation. Covered at a standard rate, majority of the people. Now, if you have a few health problems, maybe some high blood pressure, or some diabetes, or maybe you're a smoker, then you become what's called a substandard risk to them. As a substandard risk, this is where you would get rated up. All that means is you are paying a higher premium. Or you might be so healthy that you become a preferred risk to the insurance company because they prefer to do business with healthier people. As a preferred risk, you actually pay a lower premium than a standard risk. And then policy delivery. The agent should always deliver the policy. You, the agent, should do a policy review, make sure they understand all aspects of the policy they purchased. Then, if premium was not collected with the application, when you completed the application, then you would need to collect the premium. And at that time, you'd also have to have them sign a statement of good health, stating that their health had not changed since underwriting had began. All right, so that is it for this chapter. We'll see you on the next chapter.